Hello, I'm Jim Jubak, and welcome to my YouTube channel. If you like this video, like it down below. If you subscribe to my channel, you'll get all the videos that I do going forward. You can also find more stuff of mine on my free site, which is jubakpicks.com, or my subscription site, which has got even more portfolios, more writing, more me, which is jubakam.com. It's almost 50 degrees today in New York. Spring feels around the corner. We're, of course, going to have snow in the next couple of days, but I feel hopeful. And I think some of that's got to do with the fact that we've, at least temporarily, gone from a really serious 6-day decline. The NASDAQ dropped 6%. That's about a little more than halfway to a 10% correction, but reversed on a dime yesterday. The title for today's talk is 5 Picks for the Next 6 Months. And what I'm really doing to come up with these picks is looking at the lessons we've learned over the last 6 days that I think tell us a lot about where the market is headed over that longer time period. Okay, if you remember where we were on Tuesday at about say 10:30 in the morning. The market looked like it was going to be down for a 7th day, and we were looking at pretty big drops in all of the indexes, as well as we were looking at big drops in the technology sector and the NASDAQ in particular. At that moment in the day, the NASDAQ was actually down about 2.3%. And then, lo and behold, the Fed Chairman, Jerome Powell, delivered testimony in front of the Senate Finance Committee where he basically said, hey, we think the economy is picking up, but we're not going to change any of the really loose monetary policies that the Fed is pursuing. We're going to keep buying $120 billion worth of treasuries and mortgage-backed assets. We're not worried about inflation. We're not worried about the labor market being tight. Basically, he said, don't worry, be happy. And you know what? The market, being the good soldier that it is, was happy. And so the NASDAQ, which had been down, as I said, 2.3%, actually finished with a loss for the day of only 0.5%. The S&P, which had been down almost a percentage point earlier in the day, turned around completely and wound up being up 25%. What's interesting to me is what particular stocks were down and then up. So let's look at some charts. Okay, this is the NASDAQ 100 for the last month. You'll see that what happened is right around here, which is the 12th of February. That was the high. These are the February highs. So when we're measuring, decline, that's really the point we're going from. And from there, it's downhill. And what was selling off? Well, all the high growth, high momentum growth stocks that people had grown to love were selling off. So, for example, we can look at the chart of Tesla. And again, you notice this is Tesla started to drop earlier. This is around the 8th, but the drop was even more pronounced. So what you were starting to see, and what you saw sort of as a peak on the 23rd, was a big drop in all of those. And I can go through a list of the stocks that were down for the day. Besides Tesla, you had a fairly sizable drop in chip stocks, such as NXP Semiconductor, a big favorite of mine and the market in general because it makes chips for cars. You had, a down day for Amazon at that point, 1.26 down. Facebook was slightly up, but Apple was down pretty big in the morning, about almost 3%. Okay, so that's what you were looking at that point in the day. And then we saw a turnaround. And what was interesting to me is that the turnaround was, and that has continued today, the 24th, Wednesday, was not in those names. Those names are up today as of 11 o'clock this morning, many of them. But they're not up really big. I mean, Tesla's gained about 4.5%, but that's not the kind of bounce that we've been looking for. And a lot of these big favorites are still down. So that, for example, Apple at 11 o'clock was still down 1.03%. Amazon was still down 1.1%. Google was still down. Microsoft was still down. And some of the stocks that we were seeing, big favorites, like a stock called CRISPR Therapeutics. They're a gene editing stock. Big gainer going into this downturn. And it had bounced back 1.4%. But what we were used to when these stocks were in favor and unchallenged was we'd get a bigger bounce back. We'd get like a 3 or a 4% bounce. So what interests me is what's going up. And you've got stocks like MGM, which has been, this was the high for a lot of stocks in the market, but you notice that MGM just kept on going up. Caterpillar, same thing, up and up and up and up. And these are unusual in the sense that what we're looking at is not just a sell-off in the NASDAQ, but we're really looking at a rotation. That what people are saying is, hey, I don't need to rebuy Apple. I don't need to rebuy CRISPR because I can get significant, almost equal earnings growth, revenue growth off a much lower base at a much lower price in some of the stocks that are going to do well in what I would call a post-vaccine recovery. So you're looking at, you're looking at this recovery, this uptick in MGM, based on the fact that MGM got hammered because it's the dominant company on the Las Vegas Strip in terms of hotels and casinos. No one was going to those. Conventions were being canceled, but if you look at the world after that, you've got a huge possibility for an upswing. The other stock that's really interesting here is Disney, because you'll notice that Disney really didn't go down much of anything and has now picked back up. Well, Disney has been really strong because its streaming service, Disney Plus, has been racking up so many customers. But that's kept the stock here. But what people are looking at going forward are saying, hey, but look at all the stuff that hasn't been working for Disney. The theme parks have been closed or on reduced admissions. ESPN has been broadcasting what? The 1977 World Series, because there are no sporting events. And theaters haven't been showing Disney movies because, well, theaters in many places aren't open. So all of those things are going. Disney is being a classic turnaround stock. For that. So I would say that the 5 stocks that I want to look at for the next, say, 6 months or so would be Caterpillar, which is CAT, C-A-T, Coke, K-O. Again, the same thing. Coke is really the dominant company, much more so than Pepsi, in fast food restaurants, which have been closed, sporting venues, which have been closed. So you're looking at a big uptick there. MGM, I would like to see, I would continue seeing that go. Disney is number 4. And then if you're looking for a kind of inflation play, a kind of commodities play, something that's really safe, but in many ways a better play at the moment than gold, I would certainly look at something called CPER. It's the United States Copper Index. This is not an index of copper miners. There's one of those out there, COPX. That's more leveraged to copper prices because it's the miners. Miners tend to be more leveraged to commodity prices than the commodity itself. This is simply a ETF that owns physical copper. And what we're seeing is that as copper has historically a commodity that goes up in price when economies recover, because so much of it is used everywhere, ranging from chips to wiring in houses, but also because copper is getting a big boost from the electric cars, because the copper content of electric cars is much higher than the copper content of internal combustion based cars. Same thing going on with wind power, a lot of copper in turbines. A lot of copper in solar panel connections. So all those things are helping to push the price up. So for the next 6 months, if you want to buy something that's going to give you a replacement for gold, which as interest rates, as yields on treasuries go up and as inflation worries remain relatively constant, gold I don't think is the greatest hedge. This is a good replacement for gold, and I'm going to be doing a switch from gold to copper ETFs in my ETF portfolio in the next few days. Okay, that's it for me. This has been Jim Jubak. Please, if you like this video, like it. Subscribe to this video below. You'll also find links to my two sites, jubakpicks.com, my free site, and jubakam.com, which is my subscription site. Thanks very much. Hope to see you next week.